All right, we are live. Thank you for joining us today. Really appreciate it. This is another edition of Ask a Cannabis Insider here. We've got Natalie. Jessica will be joining us soon. We're going to wait till the top of the hour. Natalie, thank you for joining us.
It's my pleasure. How you doing?
Hey, I'm doing very well. Now, if anybody's watching on here, the replay, skip ahead a moment or two because we're going to just do a little housekeeping stuff here. If you're watching live, let us know where you're calling in from, what vertical you're in, where you're operating at. And if you have any questions regarding cannabis finance or cannabis taxes, let us know in the chat. We'll get to those later in the broadcast here. All right, cool. So we got a few people joining in, lots of people jumping in. All right, excellent. This is beautiful. Thank you for jumping in. Again, drop any questions in the chat here. We're going to get started in about 20 seconds here. Last few things. Cool. All right. Close out on that. Beautiful. All right. Let's see. All right. Well, let's go ahead and let's get started. Again, thank you everybody for joining our live stream, Ask a Cannabis Insider. We're going to talk with Natalie and Jessica about upcoming tax information, things you need to know. Now, before we get started, I need to let you know that the information contained in this presentation is meant for guidance purposes only, and not as professional legal or tax advice. And further, it does not give any personalized legal, tax, investment, or any business advice in general. So real quick at a high level, our agenda is going to be like this. First, we're going to cover topics including data privacy at GreenGrowth CPAs to celebrate Get to Know Your Customer Day. And then we'll talk about tax updates and expectations, and finally take some questions from the audience. So drop those into the chat platform that you're on. If you're on YouTube, LinkedIn, Facebook, let us know. Now, if you need help with anything finance related or tax related for your cannabis business, then please reach out to us via our website at greengrowthcpas.com or give us a call at 800-674-9050. All right, so let's go ahead and we're going to hop back in. I'm going to pop Jessica in here. All right, Jessica's here. We're live. Thank you for joining both you gals here. So let's go ahead and jump into a little bit about data privacy first. Okay, so at GreenGrowth CPAs, we use a tax software called Canopy Tax. So Natalie, could you go into a little bit about why Canopy Tax is one of the best softwares for this kind of issue of tax processing and things like that? And Jessica, you could add some color and context as well. But let's start with Natalie.
Well, especially since the pandemic, we're in this brave new world. And your CPA or your tax preparer may not be down the street like you've done in years past. So we may be in different parts of the country. And we use this software that's specially made for accounting purposes. So you can upload safely, securely, easily upload your very sensitive financial, documents with your social security number, all of your other information safely to us, and it won't get, for lack of a better phrase, stolen off the internet.
Exactly. And then Jessica, anything else you'd like to add on to that?
Yeah, so everything that Natalie said is completely accurate with how secure that Canopy is. I also love it because it's just really easy. It's almost easier than even attaching to an email because there's a mobile app for it. You can attach things straight from your phone. It's just really convenient, and it helps you keep track of everything that we've requested. So it'll remind you if there's outstanding requests, and it will communicate back and forth with your tax professional and alert them when you've uploaded things. So the security of it is amazing, and the convenience of it is equally amazing.
Yeah, thank you. And then also, Natalie, I think you brought up that in some states, it's actually illegal to pass certain sensitive documents via other channels. Could you add some little thoughts on that as well?
Yeah, correct. So really, in my state, I'm operating out of the state of Nevada. It's actually illegal to send or receive anything with a social security number on it or any other identifying information. So you never, ever, 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 how many evers was that? You never want to email something directly, like, for example, a W-2 or a 1099, anything with your social security number on it, because it could just be snatched out of the air. So that's why we use the portal system. It's almost like when you go to the bank and you put all your stuff in that tube and it goes right directly to the teller and nobody else can get to it. It's a just very, very safe and effective way of sharing information.
100%. Yeah. And you guys do fast e-sign on the tax return. So no need for mailing any papers back and forth. Very secure, very quick, and very convenient from my understanding.
You could even sign on your cell phone if you want to.
How about that? Signing on the
This is
go.
very nice.
Good deal. And then another software we use for our Cannabis CFO service is QuickBooks, QuickBooks Online, QuickBooks Desktop. And with QuickBooks, I want you guys to know that your data is protected and private. They rely on industry-recognized security safeguards to keep all of your financial data private and protected. They're a VeriSign company. And another thing about QuickBooks is that everyone is held accountable. There is no way to turn off the activity log on there. They have an always-on activity log, which is a complete record of all the activities while the audit trail is on and easy to read, and kind of keep a history of all the changes for specific transactions. So QuickBooks in our CFO service, Canopy in our tax service, two very important things for data privacy and helping our clients stay confident and secure about their financial documents. So moving on from that, let's move into some of the questions about taxes this year. There's some things that are kind of get updated here and there from year to year and some kind of special considerations. So we'll jump right into the first question that I've gotten via email, and I want to kind of talk about this. So many people think that, hey, maybe I shouldn't be expecting a huge tax return this year, or maybe nothing at all, maybe something that's not normal or traditional, we'll say. Because of three different things. You have the advanced child tax credit, pause student loans, and then year-end mutual fund payouts. So Natalie, could you hit on the advanced child tax credit and how that could potentially affect some of the tax filings for our clients and everybody else as well?
Sure. So for 2021 and 2022, I believe, the child tax credit, which was at $2,000, if you have a child under the age of 16 or under the age of 17 in your home, the child tax credit was $2,000 if you meet some income parameters. That has gone up to $3,000 per child and $3,600 a child if they're under 6. So what they also did with that is during the year, you may have noticed, you may have received some checks from the government, which was half of a monthly payment towards that child tax credit. But basically what you did is you're borrowing against a future refund or that future credit on your tax return. So if you received those checks during the year, you don't get that full credit on your income tax return. So you're basically borrowing on that credit for the year.
Gotcha. So that could catch people as on a side, like, hey.
So right. So if you are expecting $3,000 credit for your child, you've already been paid $1,500, let's say, in the year. So you're only going to get a $1,500 credit on your tax return. You could run into problems also. There's a lot of divorced parents, let's say, who go back and forth and claim a child in every other year. So if you claim that child last year, the government still thinks you're going to claim that child this year. They may have sent you advance payments, but you're not going to claim that child this year. Well, you're going to have to pay those payments back.
Gotcha. Jessica, anything to add to that?
No, I think Natalie nailed it on that one. And then, I mean, the same thing, like she said, on the divorced parents, if you claimed the child last year and you're not this year, you have to pay it back. Same, like she said, if you meet those, exceed the income criteria, you'll have to pay it all back as well. So to your point, you should somewhat expect a lower refund this year due to potentially having to pay some of those credits back and you getting that payment up front, even if you do qualify.
Gotcha. Makes sense. Thank you for sharing that. And then another one here is pause student loan payments. Jessica, could you add some color and context to some thoughts on that as well? Because I know people, typically try to claim these itemized deductions here. Let's explore that a little bit with the student loan payments.
Yeah, so the pause student loan payments will affect your refund. It won't be as big of a hit as the child tax credit payments. But if you normally deduct the interest that you're paying on those student loans and receiving a reduction of your taxes for that, then you see that this year because you can only deduct the paid, not interest that has accrued. So since the payments have been paused and no payments have been made, there's been interest that has been paid and therefore no deduction.
Excellent.
And that's actually an adjustment to your taxes. It's not, you don't have to itemize to get that particular adjustment. So it would directly reduce the taxable income for whatever interest that you paid.
Gotcha. Makes sense. Yeah, I'm still paying on student loans and I bank on that credit every year. So, yeah. Gotcha. And then the last one here that could potentially affect loans here or filings is mutual funds here. So Jessica or Natalie, would either one of you want to add some color and context to why better mutual fund performance could potentially lower tax refunds?
Well, it's very simple. Mutual funds actually did very, very well, which means a higher income or a higher dividend that you would have to claim on your income tax return, which ultimately increases your tax liability.
Gotcha. All right, excellent. We'll just keep going down the questions here. Again, if you have any specific questions, drop those into the chat on your preferred channel, and we'll get to those as they come up here. Real quick hot take here. Is there any changes in the tax rates from 2021 filings to 2020 filings?
No real change. The tax brackets change a little bit, but it kind of went up a couple of dollars each way. Nothing to basically write home about. So, the deductions pretty much stay the same, and the rates are about the same as the prior year.
Excellent. Okay, cool. And then let's focus on processing time. So tax season opens up on January 24th for 2021 income. The deadline for filing is going to be on Monday, April 18th. And then October 17th is when the extension deadline is. Now, in previous years, we could reasonably, hope to get a tax return and done in 2 to 3 weeks, or filed and get a refund back. Has that changed? Should we focus on getting our taxes in earlier? What are some thoughts around the backup that we've been seeing at the IRS, Jessica?
Yeah, so the IRS is extremely behind. They have made actually even recent announcements on it about how they still have millions of returns from last year to process. So what my kind of rule of thumb that I've been operating by is take their normal processing time and at a minimum double it. And that's typically what we're seeing for anything. And then for anything paper filed, you could essentially triple it at least and see that being the processing time. And they're just very delayed, and they're understaffed, and they had a lot of extra calculations with the stimulus stuff. So they're very behind, and they're nowhere near caught up.
Gotcha. So get your stuff in early.
And I think just the general overall takeaway is you want to get your information to your tax preparer as soon as you possibly can, because an accountant or a tax preparer in April is a very, very tired accountant. So, try to get your information in as soon as possible.
100%. Yes. If you're a client of ours, if we've worked with you before, reach out to us sooner rather than later. Yes, you're going to get, get things done faster. We just get it in earlier. So cool. All right. Now, one thing. So go ahead.
One thing to add to that quickly is just because you get us your stuff earlier, and even if you file earlier than normal, it doesn't make your tax liability due any earlier. Any tax liability due is always due on the same date, no matter when you file.
So in other words, you could file your tax return on February 13th. The tax isn't actually due until April 18th this year, because the 15th lands on a weekend.
Excellent. Yep. Good point. That's a very good point.
That's a good point.
Perfect. All right, cool. So there's a lot of new cannabis businesses that have started in the last year, and maybe they're non-operational, so no revenue, first-year filers. Do they need to file taxes? And would there be any kind of tips that you would give them, maybe documents to keep, things on losses, things of that nature? Either you want to take on that question? Maybe Natalie? Know a little bit more about these
deer in the headlights. Well, that's a very, very common mistake. And so a lot of people, for whatever reason, they'll, file their articles for their new corporation or their new entity in December, let's say. And they think, well, I just filed my articles. There's been no activity. Nothing's gone on. I opened it at the end of the year. There's no tax return that's due. Well, that's wrong. The IRS assumes that you've had that entity the entire year, even if you filed your articles December 31st. So there would have to be a tax return that is filed for that particular year, even though it's no activity, or you may just have a couple of expenses, some filing fees. Depending on what state you file your articles in, there may be some additional state fees as well.
Gotcha. And then
always file a tax return.
Always file a tax return. If you have any questions, just reach out to us specifically on that. Cool. Well, that makes sense. New businesses, make sure you're filing. And then let's talk about something here that's, it's not unique to GreenGrowth CPAs, but I think we pride ourselves in it for increased confidence here is multi-professional review. So at GreenGrowth CPAs, we have multiple tax professionals review your tax return and the work papers of the tax professional to make sure that every base is covered completely. Jessica, could you tell us a little bit more about that?
Yeah, so we have a very specific process that we follow, and we use specific documentation, and we support all of the stances that we take on a tax return. And so we have it go through an extensive review process to make sure that our specific process and all of our stances and everything have been fully documented. And then it's also reviewed not only for accuracy, but also for like analytical things. Like, is there something that you could be doing better for next year to prepare for taxes? Like if there was a certain deduction, maybe we missed this year because we didn't meet a qualification. And if there's a slight change that we could make on that for next year, we have that all fully reviewed. And then we are communicating that to the client as we see that as well.
Excellent. That's great. Awesome. Yeah. When you miss out on deductions, yeah, because you miss a threshold, but hey, next year, spend a little more, do this activity, try this, and you can kind of qualify for other things. So that's excellent to hear. Cool. We'll keep going down here. Now, aside from financial documents, 1099s, W-2s, what types of information should clients be giving to us to make sure that their tax prep is done in the most advantageous way for them? Employee handbooks or their Quickbooks, any other things, cash logs. What else should they be kind of holding on to and giving to us? I'm assuming it's more than what people normally think. But Natalie, why don't you hit on that? I believe we talked about a payroll example, if you had that as well.
Well, obviously all of your source documents. And what I mean by source documents is everything that has been sent to you by anyone that's W-2, a 1099 from a bank, a 1099 from a job that you did, during the year. So anything that has been also filed with the IRS, you need to report on your individual tax return because there's a matching program that happens. So if you miss a 1099 income on your tax return, you're going to get a letter from the IRS and say, where did it go? We know that you made this money. So, and fixing that is harder to do than just claiming the income in the first place on your original tax return. Obviously, if you are in cannabis, we're going to want to know what your operations are like. There's some additional hoops that we have to jump through for cannabis companies, and your QuickBooks are always great. There's always questions about what type of expense it is, and we can kind of dig a little bit further and make sure that we're taking the right amount of expenses. And then if you issued your own payroll, say you have employees, we're going to want the backup of all the payroll tax reports and the W-2s that were filed with the Social Security Administration, because 9 times out of 10, the numbers that show up in your QuickBooks don't quite match exactly, with the taxes, the employer taxes paid. So we're going to want to make that reconciliation.
Makes sense. Jessica, anything to add to that?
No, I completely agree with Natalie. Is those payroll filings that we're constantly asking for. So that, and then also to her point, we're not necessarily going to need all the receipts or anything like that. We're not auditing you, but if we could have access to your financial statements and like your general ledger, maybe your QuickBooks Online account, we can find a lot of the detail we need there to take those allocations. But yeah, we don't typically need every single receipt that you have or anything like that.
Makes sense. Okay, cool. All right, then let's continue down here. We've got maybe 6 or 7 more questions here. And then if you have any questions, if you're watching the live stream, drop those into the chat. If you're watching a replay, hey, leave a comment in the video and we'll get back to you with an answer to that question. Or if not, visit our website, greengrowthcpas.com. In the top right, there's a Get Started button. Click on that, fill out the form, and one of our representatives will get back to you. Now, one of the things here is that we've seen a lot of CPAs retiring over the past year. We've heard it from clients, and we've seen it kind of within our own circles. So what would be some advice you would give to a client that's transferring over to us from another CPA? Maybe prior returns, other schedules, things like that. Jessica, could you add a little color and context to that?
Yeah, so what we would need when you're coming from a different different preparer in a prior year is first and foremost a copy of your prior year tax return, because there are things that roll over to your current year, and there are different deductions that you might not have been able to fully take in the prior year that we could look into taking this year, but we need a copy of that return in order to do so. And we also need the associated depreciation schedules. Typically that's included with tax return copies that you receive from your prior preparer. We definitely need that if you have it, and that will also help us with carrying over the depreciation that you haven't previously taken and being able to maximize those deductions in the current year.
Excellent, excellent. Natalie, anything else you want to add to that?
Well, that's what makes GreenGrowth so exciting. Accountants, bookkeeping, tax preparation as a whole, it's kind of a dying industry. Not a dying industry, but it's aging out. So GreenGrowth is a lot of young people that are willing to embrace technological innovations, and it's really, really exciting.
Yeah, and GreenGrowth, we specialize specifically in cannabis taxes. Going from a general CPA to someone that, like us, who specializes in cannabis only. We do your personal taxes as well if you need that, but a lot of the kind of experience and knowledge and expertise is domain specific for cannabis because of the nuances of the tax laws and things that we've seen for many, many, many years and working with hundreds of clients. So yeah, it doesn't fall on deaf ears here. So cool. One thing that we see kind of sent in a lot through our communication portal is Form 8300s. That's for filing cash payments over $10,000. You need to send a form to the government and give it to the person as well who's paying. A lot of us cannabis businesses are not taking the time to file those, and they may kind of hold back from filing their taxes because of that. Should cannabis operators be worried if they haven't filed Form 8300s about their tax filings, or do they not interact at all? Kind of give some color and context to that, if you could, Natalie.
Well, the 8300 is done throughout the year, so that there's a time limit to file those returns, from the time of the original transaction. So, but it doesn't affect your actual income tax filings. But if you have not filed them, please do. And if you have any questions, contact us. I would suggest you filing them as soon as possible, but it's not going to affect your income taxes.
Excellent. Perfect. All right, cool. Let's keep moving on from here. Natalie, is there any kind of updates on bonus depreciation or depreciation overall? Or if not, let us know a little bit about bonus depreciation. I don't think many people talk about it enough and how much impact it can have on these.
Sure. So if you buy an asset for your business, you typically anything maybe over $1,000 or over $5,000 or whatever your business is, you have this asset, and typically you have to depreciate it over a particular period of time, depending on what the asset is. There's something called bonus depreciation. It is in effect for 2021 and 2022. In 2023, it'll go down, and I'll explain that in a minute. But what you can do, you can elect, say I buy something for $5,000. You can elect to fully depreciate that asset in the first year, or you can elect to regular depreciate it over, let's say, a 5-year period of time. You can't do a hybrid of both. You have to do either one or the other.
Gotcha. Okay, cool. Sounds good. And then you said that's going away potentially in 2020?
Well, it won't go away. So in 2023, what they're saying is that it'll be an 80% depreciation. So say you buy something for $1,000, you could depreciate $800 of it, and then that remaining $200 would be depreciated over the life of the property.
Gotcha.
What's nice about bonus depreciation too is that in prior years, it had to be a new asset to qualify for bonus depreciation. It just has to be a new asset to you. So it could be a used car. It could be a used piece of equipment, and you can still bonus that.
All right, cool. So it was from 100% bonus depreciation to 80% next year.
In 2023. Mm-hmm.
Cool.
Yeah. Yep.
Awesome. Cool. There's a question here from Aslan. He's asking, are you guys able to pull customer data from Metric? And if so, what kind of data? As in, we can do that if the client wants us to do that. There's specific things that are on there for our CFO service. I know that the CFO service works intimately with the operator, making sure their metric data ties to their QuickBooks data, that everything's speaking together. So not necessarily specifically on tax returns, but on our CFO service, yes, we do work with the customer's metric data. And then, cool. Any other questions, drop them into the chat. I see Sharon is here. Sharon has been on like every live stream for a long time. She says she just sold her accounting business. She was at, I forget, not UConn, but another tax service. And it's great to see that the kind of industry comes together to talk here. So thank you very much for joining. I'm glad to hear you sold your business and that you're potentially going to have your last day on the 31st. That is excellent. Let's go to the next question here. 1099s and W-2s for current clients. I know we're bumping up right to a deadline here. Either one of you would like to jump in and tell us, when those need to be finalized and what info should our clients be getting to us? And let's see that.
Well, there's a hard deadline every single year on that. It's January 31st every single year. So, and again, it's January 31st this year. So that means that your 1099s and your W-2s have to be postmarked to your employees or your vendors by January 31st. They also have to be filed with the Internal Revenue Service by January 31st. Excellent. And what we would need, for example, for a 1099 is, the name of the person that you paid, the address and the social security number or employer identification number, and the amount that you paid them. And you would pay an individual or an LLC. If you pay a corporation for anything, there's no 1099 that needs to be issued.
Gotcha. And then for next year, I know we talked in our chat yesterday about planning for next year. You had some advice about not paying people until you get a certain form. Can you add a little color to that?
Well, so this is the time of year that most employers or most companies are scrambling to find that guy that they paid in March, for trimming services, because they need to issue a 1099 to him, and they're trying to find him, and the guy doesn't want to give him his address or social security number because he probably doesn't want to claim the income. So I would say that before you pay anybody $1, say, here's your check, but before I can give this to you, I need this information from you. You can download a blank, it's called a W-9 form, and you just keep that on hand, and it gives all the information that you need in order to pay somebody.
Excellent. Yeah. Do not pay without getting a W-9 filled out, or you're going to be on the hook for some problems.
Correct.
And we don't want that.
If you want to take the deduction, you're going to have to issue the 1099. And dovetailing into that, there's some very, very important questions on every single tax return. And the first question is, did you pay anybody that you would have to issue 1099s to? Yes or no? We as preparers, we have to answer that question truthfully. The second question is, did you issue those 1099s?
Yeah.
Yes or no? And I can guarantee you, if you answer yes to the first question and no on the second, you're asking for an audit.
You are asking for an audit, and that's not anything you want to be dealing with. Not at all. It's going to be long and drawn out too, I'm guessing, with the backups at the IRS. You might be doing a 6-year audit on 1 year of taxes. Yikes, 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 yikes. Quick question here from Jessica. She asks, when starting a business, how does an owner's past debt affect the company? For example, if medical bills have gone to creditors unanswered, will the company have to answer for that at some point? And I believe the answer is going to be no. I don't believe any personal debts funnel up to the business, but the business debts in cannabis, there's no such thing as bankruptcy in cannabis. So you may find that your business debts will then trickle down to you personally. You can't untie from them as pleasantly as you can from a typical ordinary business. There's a thing called receivership. We've made a fair amount of videos on receivership. There's a whole playlist of them. You can check them out on our YouTube channel. Learn a little bit about receivership, but personal debts should not walk up to the business, and they shouldn't have to answer for that. Am I correct in saying that from you guys' knowledge?
Mm-hmm. I agree with that, Jim. Yeah.
Excellent. All right, Jessica, hopefully that was helpful for you. And then let's keep going down here with the questions. A lot of businesses give a free product out to try to get the word out, whether it's, to people in stores or to distributors and things of that nature. What are the implications for taxes and giving away free product to distributors or to clients? Is there anything special that they need to kind of document, or can they take the market price of it versus the kind of the purchase price of it? Jessica, could you help us a little bit on that one?
Yeah. So when you're giving away a product for free, you can deduct your typical cost of goods sold related to that product, but you can't deduct the market value of it. Same with if like the product was bad, or for some reason you had to like get rid of it, dispose of it, or you're donating it. You get to deduct your normal cost of goods sold that you would deduct anyways for it, but you can't mark up those expenses to the market value that you would have or should have received if you sold the product at market value.
Gotcha. So what you paid for it is pretty much all you can deduct it for. So make sure you got all your receipts for how much you paid for these things and how much you're giving away. I'm guessing, is there like a schedule that people keep of like how much they gave away? Is there any kind of documentation that you gals have seen come through? Like we gave away 800 pieces of this, or is it just, how do you typically see that come through?
Well, and there may be some excise tax due on that product that's been given away. So we would need to see those monthly sales tax reports.
Excellent. Gotcha. Okay, cool. Let's keep going down in the questions here. Over the past few years, actually over the past year, I've seen a fair amount. Many of our clients have been merging with each other or with other businesses. And a question that kind of comes up pretty much in every transaction is, does every entity need to file taxes, even if it was filed to be dissolved last year? So would either of you want to jump in on answering that question about mergers and acquisitions and tax filings for those businesses?
Yeah, so every entity needs to file a tax return. When you say it was dissolved last year, it really depends on if the final tax return was filed or not. So right now we're in 2022. Let's say you filed with the state in 2021 to dissolve your entity, but you still would need to file that final 2021 tax return before your filing requirement ends. So you have to continuously file a tax return until you've let the IRS know that the business is closed.
Gotcha. And then Natalie, there was a little tips or trick you talked about, a final tax return. Would you want to share that tip with the viewers real quick about?
Well, it's an old CPA trick. You didn't hear it from me, but not typically, but you can't prove it. But when you check that box, final return on your income tax return, the IRS, there's a higher prevalence of the IRS going back and auditing that particular entity. So what we typically do is, instead of checking the box final in your real final tax year, filing no activity returns for a 3-year period. And what that does is it runs the statute. So at the end of that 3-year period, you're going to have basically no activity return, no activity return, no activity return. At the end of that 3-year period, then you mark it final. If the IRS then does go audit you, it's been 3 years of no activity. There's really nothing to audit. You're just basically running the statute.
Boom, statutorily protecting yourself. That is big brain material.
Now, having said that, though, there are going to be costs associated with that. You're still going to have to pay for, income tax return preparation. Depending on what state you live in, you may still pay minimum state fees. So you would have to weigh your own risk there.
100%, yeah. Depending on the state that you're in, how clean your books were before. Hey, if you've been working with GreenGrowth CPAs, everything's on the up and up. You should be fine. But if you've been working with somebody else, you don't know. We don't know. All right, cool. There's another question in here. Jeanette's Fine Furniture. She asked, is there anything for cultivators that they need to know about 2022 taxes that are new and exciting? Is there anything that you guys know specifically for cultivators, or is just things kind of the same here for tax filings for them?
Now, I'm not sure if she's talking about for 2022 for the taxes that we'll be filing this time next year for the 2022 tax year, but nothing new. Maybe she's talking about for 2021 that we're filing in 2022. Nothing necessarily new. That there's been no major legislation on cultivators that I've seen it. What about you, Jessica?
I haven't seen anything either. It's actually nice. This year's been kind of a quiet year for tax changes. There's nothing huge going on.
Excellent. Yeah. It gets kind of frustrating when there's so much changing and you've got to read these very difficult tax laws that the legislators have not even read, and they've been redlining. Right. And then you're like, oh, we have to interpret these, make new forms, and make sure everybody knows what the heck's going on. So No, good. All right. So yeah, Jeanette, nothing big for cultivators in filing during 2022 for 2021. Just 3 more questions here, I think. And multi-state operators, is there any special considerations that they need to think about or to know versus a multi-state operator? Jessica, is there something you want to add for that, for multi-state operators, thoughts or considerations?
Yeah, the main thing is to make sure that you're filing in every single state that you're operating in. And then we also need to be sure that you're filing all the appropriate reports in each one. For example, California has the LLC reporting requirement that we have in addition to the income tax return. And Oklahoma has a franchise tax return that we have to report and file as well. Each state has their different nuances. So it's just making sure that you're up to date on all the reporting requirements and you are filing your income tax return in every single state that you operate in.
Yeah, I believe that if you don't file certain taxes in some states, you may lose your license to operate a cannabis business, and that could prohibit you potentially from also getting other cannabis businesses as well in the future. If they find out you're a bad apple, they may not allow you to be joining the club again. So be very, very thoughtful. It's hard as hell to get a cannabis license. It would be a shame to lose it over just some kind of tax filing that you're avoiding for whatever purpose. So beautiful. Let's go. We got 2 more questions here. A fair amount of our clients have foreign investors. Are there any special considerations when working with a client like this, such as any documentations or filings or info or signatures that those clients need to recapture? Natalie, would you like to hit on that one for foreign investors?
Well, foreign investors, if you have foreign investors, that sort of precludes you, if you haven't filed your articles or set up your business yet, it does preclude you from being safe an S corporation, for example, but you can be a regular corporation, you can be an LLC. But really the only issue with foreign investors is there may be some extra forms that we have to fill out inside of the tax return to disclose that some of those members or some of those shareholders are in fact foreign.
Gotcha. All right, cool. Now, Jessica, anything else you want to add to that?
Nope. Natalie hit it.
There we go. All right, cool. All right, and we're going to be wrapping up here in a few moments. If you have any last questions, drop them into the chat here, and we'll get to those questions. And then, and if not, we'll wrap it up. But I have one last question for myself that I saw this morning, an article come out. I saw that the IRS is potentially going to be using facial recognition for online filing using ID.me, where you take a selfie and pay your tax bill online. Have either of you seen that article this morning, or have you used ID.me for tax filings?
I have not seen that article, but I know that there have been states that have been using this technology. If, say, you're waiting for a refund or something, that they're having you snap a selfie with your cell phone. I don't know about the IRS yet. We'll see. I can't really offer anything other than that. Gotcha.
We'll see how it comes together. All right. Well, that's all the questions I have prepared. I don't see any more coming into the chat here. So again, ladies, thank you very much for your time. Viewers, thank you for joining the live stream. Again, if you need any help with your cannabis business taxes, finances, you need an outsourced CFO or anything finance related for your cannabis business, then please reach out to us via our website at greengrowthcpas.com or give us a call at 800-674-9050. Natalie, Jessica, thank you very much for your time. Really appreciate it.
Thank you, Jim.
Thanks, Jim.
All right. Have a good one, y'all. Have a great day, and we'll talk to you soon.